Hello, my name is Luke Fried, and I will be presenting a very bullish outlook on Ansys, which I think is a buy. So before we begin to determine the long-term prospects of investing in Ansys, we should first take a look at Ansys as a company. Ansys is a revolutionary company in the field of simulation software, offering a comprehensive variety of tools to delineate the physics of any engineer's creation. Ansys is able to accurately model structures and electronics and analyze the fluid flow, electromagnetism, elasticity, toughness, and strength of a digital product, which is exceptionally valuable to numerous companies around the globe. Through their perpetual innovative growth and financial strength, they have become the largest engineering simulation company in the world and has been a leader in the simulation industry for almost 50 years. Here we can see Ansys technology being used to determine the aerodynamics of a vehicle and the effects of the outside environment on a skier. Now, Ansys's total addressable market is expected to grow from $6.6 billion in 2018 to 15.8 to 20.6 billion in 2026, which represents a compound annual growth rate of 16%. The primary factors driving this growth include the major disbursements towards simulation in aerospace, healthcare, defense, high tech, and energy. Especially in the healthcare sector, simulation models can provide an in-depth analysis of various medical practices and procedures, enabling doctors to streamline clinical trials, manufacturing certain drugs, and medicine development processes. So my investment thesis for Ansys is that they are a buy, with a target price of $885.52, representing an upside of 169.8%. There are three primary factors that led me to this decision. The first of which is that they are currently creating riveting technology. Ansys has three primary segments propelling their long-term growth and innovations, which consists of electrification, 5G telecommunications, and autonomy. Ansys is driving electrification through software development and pervasive simulation, expediting the current electrical breakthroughs throughout society. They are also developing a multi-physics analysis for 5G communication systems, which will accelerate the ongoing 5G technological revolution. However, one of the most impressive and innovative segments Ansys is penetrating is the sphere of autonomous technology, in which they are utilizing simulation software to evaluate the safety of certain autonomous vehicles. This helps particular companies gain a competitive advantage over other competitors attempting to exhaustively spend billions of dollars in testing self-driving vehicles. Ansys is also capitalizing a growing market with continuous investments to strengthen their core, both organically and through acquisitions of various companies. Ultimately, Ansys has a historically robust business model based on the four primary propositions of accessibility, cost reduction, risk reduction, and brand. Ansys's software is used by over 45,000 customers worldwide, which includes 96 of the top industrial firms listed on the Fortune 500, such as Audi, Samsung, and Airbus. Now, Ansys is quite obviously not the only company in the simulation software market, although they do have a rather potent yet steadfast disposition in the market, retaining highly favorable advantages over their competitors. First off, Ansys provides a wide-ranging set of applications, including 3D design, fluid simulation, acoustic simulation, optics and VR, autonomous vehicle simulation, photonics, digital twin creation, and safety analysis. Additionally, Ansys has extremely strong switching barriers. Mastering Ansys's technology takes an extended amount of time and often requires a steep learning curve, which will likely dissuade customers from switching to other technology due to the weighty time that customers have invested in their work. Ansys also currently has several academic organizations and universities using their technology, often at a discounted price, making it financially difficult for institutions and students to entirely switch companies. Finally, Ansys provides their customers with an auspicious benefit to cost ratio, saving their users time, energy, and resources. This strong benefit to cost ratio is intertwined with the strong switching barrier as well, as many of these assets can be found nowhere else. Now for a look at Ansys' financials. Their current stock price is $328.16, which is an increase of 38.1% over the past year. Their year-over-year EPS growth rate is 9.8%, which was used to determine their projected EPS in 2024 to estimate the target stock price. More notably, however, with a solid net income and annual revenue, Ansys clearly has cash available to reinvest in technology, as well as pay future possible dividends, repurchase shares, and of course, save for future investments. Additionally, with large shareholder equity and relatively low long-term liabilities up until 2020, Ansys has an extensive network of assets and minimal liabilities in past years. We can also see a very strong EBITDA margin, which has ranged from 35 to 42% over the past 5 years, displaying high profitability for the company. Remarkably, however, is Ansys's consistent overperformance of expected financials, even during a year of financial instability for most. Ansys beat the consensus EPS during all 4 quarters of 2020 and has continuous revenue growth over the past 4 years. Taking a closer look at Ansys's financial performance, we can analyze their Z-score, M-score, and F-score. Their Z-score is used to determine the chances of a company going into bankruptcy in the next 2 years, which is considerably low for Ansys, seeing as that they have a Z-score of 19.4. From their Z-score, we can tell that their return on invested capital is strong and expected to increase. The M-score is used to tell if a company is altering their earnings to appear more attractive to investors, although this is quite certainly not the case for Ansys, as they have a score of negative 2.74. Finally, the F-score is representative of a company's financial performance throughout past years, which is based on profitability, efficiency, and funding. Ansys has an F-score of 7 out of 9, which represents a very strong financial position. Although their 2 weaknesses are that they have a higher leverage in long-term debt over assets change and a decrease in current quality of earnings. Now we can do a technical analysis on Ansys's medium to long-term growth in the next couple of years. Now, based on the 7 measures of the technical analysis, 2 of them have a sell insight, which is primarily based on the recent swoon in tech stocks. However, seeing as that Ansys's rebound game is exceptionally fast, their price change and percent change indicate a buy opportunity, since they appear to be in a short-term bullish run. One of the most interesting measures besides these stochastic indicators is the MACD oscillator, which returns a value of negative 5.73 for the company after a 24% dip. Let's take a moment to think about that. Any other company would take months on end to recover from a plunge like that, although Ansys has already increased by a significant amount in just a short period of time. This exceptionally strong rebound game is attractive in times of widespread economic uncertainty, such as the financial crisis of 2008 or the COVID-19 pandemic. In the 2008 financial crisis, Ansys' stock fell 57%, and it only took them shy of 1.5 years to recover entirely. Wow. Ansys evidently has an exceptionally strong and robust business model capable of rebounding from crashes exceedingly faster than other strong companies. Now, to determine the target price of Ansys, we can first calculate the estimated EPS through the average EPS year-over-year growth rate of 9.8%, giving us an estimated EPS of $7.24. We can multiply this by the expected PE ratio of $122.31 to give us $885.52, representing an upside of 169.8% from the current share price. Now, any investment quite obviously comes with risks, although in this case, they are not as threatening. New entrance in the market is quite certainly a risk Ansys must consider due to the market's rapid rate of expansion. One of the more prevalent risks is the possibility of a defect in Ansys' safety analysis. A single defect in the evaluation of the efficacy of a certain product may create safety concerns, as well as poor publicity for the company. Especially with autonomous vehicles, Ansys must continuously ensure that their technology is accurate for their customers. Finally, Ansys' long-term debt as of 2020 is $1.84 billion, which is not currently threatening the business, although they must reduce this before it begins to cut into other sectors. As for ESG considerations, Ansys is ranked in the 96th percentile in the software and services industry. They are currently attempting to reduce carbon emissions, maximize energy efficiency, reduce water usage, and reduce greenhouse gas emissions, which is augmented through partnerships with other companies. Also, Ansys has various volunteer efforts throughout the globe, primarily regarding the fields of technology, science, and STEM. They recently collaborated with the IIT Kanpur-led consortium to create a reliable and safe ventilator to combat the COVID-19 pandemic. Finally, Ansys has an exceptionally diverse team of individuals, with women consisting of a significant percentage of Ansys' workforce, as well as various ethnicities comprising their employees. Ansys is currently trading significantly below their target market price with unparalleled expected growth. And I think they're a buy. Thank you.